Okay, good afternoon, everyone. Welcome to the VANTEC Angel Network, Inc. We always have these monthly events, and we've been doing this since the last century. So thank you for keep staying with us. Every other month, we have a themed event. And this month, lucky you, we have themed CleanTech. But before we get started, we'd like to do a little bit of a land acknowledgement. Because even though we've been operating for almost a quarter of a century, people have been here much longer. So with gratitude and respect, we acknowledge that we are gathered on the traditional, ancestral, and unceded territories of the Musqueam, Squamish, and Tsleil-Waututh nations. VANTEC is a group of angel investors. We've been meeting together every month. We, since 1999, and we support BC-based high-growth ventures with venture capital connections and advice. Today, we're going to start off with a panel presentation first, and then a panel on investing in clean tech and climate tech. So with that, I'm going to ask my friend and colleague, Jeff Hansen, to tell us what's what in clean tech and all the investment trends.
Okay, for the third time in 2 weeks, I've been asked to present in 15 minutes what I normally present over an hour and a half. So what I'm gonna do is I've got 39 slides, and they're all going to be available for you for reference. I'm only going to speak to maybe 10 of them in detail. Okay, so first of all, I'm going to cover some ground that's important to understand if you're investing in clean tech. And the stuff that I want to cover is, how do you understand what's the right amount, what's the right valuation, who's investing in this area, how are they investing? And I'm going to run through that fairly quickly. So there was a big boom in clean tech investment in 2006 through 2011. And there was a lot of excitement, but a lot of the investors that were investing were people that invested in software and other stuff and didn't really understand clean tech. So it didn't work out too well for them. And so that created a challenging time between 2011 and 2015 for a lot of companies to get financing. But we've seen that sort of correct now, and that we're in a boom time again for clean tech. And there's more deals than have ever occurred before, and it's quickly ramping up. And the reason for that is varied, but the simple answer is, there's more impact on the climate. We care about it more, and people are more sophisticated in understanding how to finance these type of companies. So this is a standard diagram I show for tech companies, mostly software companies, and how they get financed and all the various capital sources available to them. And when we're looking at all these different financing sources, the key thing we think about in commercialization for your standard software company is how to avoid the valley of death. And it's basically launch your product and acquire as many customers as you can before you run out of money. But when we talk about clean tech, this pattern is a little bit different. So first of all, in clean tech, there's many more stages in terms of commercialization and getting to the promised land and being a profitable company. And there's a different mix of financing sources. And this diagram comes from SATC, and it shows where the Canadian government is good providing supporting funding to give us money to achieve what these companies want to achieve. And when we look at clean tech, we actually identify that there's 3 different valleys of death. And that is where a lot of these government programs come in place to help companies bridge across that so that we can achieve the economic benefits of these companies. And there's a series of stages these companies have to go through to eliminate risk over time. And that basically is, first of all, getting to demonstration of the technology, then getting some market penetration, and then scaling up the offering. And each of those requires a different type of financing and a different type of investor lens. When I look at the marketplace, I look at it this way. I look at all the various different technologies you see on green. I put them on a grid. On the left-hand side are the different subsectors of interest for CleanTech. And across the x-axis, I have the various different types of customer types. And each technology has a different mix of these different things, and that's what you have to understand to analyze it. Other analysts analyze this and looking at terms of infrastructure versus affecting the environment versus energy contribution. In Canada, we are lucky to be in a country that is very supportive of these clean tech sectors. And this is a diagram that shows all the various government programs that are offered as incentives in different parts of the country and different subsectors of clean tech technology. And that is more comprehensive than anywhere else in the world. The federal budget that came out recently had $4 billion committed over the next 5 years in terms of direct spending in the sector, but also offered $83 billion in tax credits. Don't ask me how you get all those yet, because the fine print's still coming out. We're all trying to figure out how to support companies best with these new initiatives. But it means that that diagram I showed you before, you have much more support than ever and more incentives than ever to create technology that addresses climate impact. There is a dream of getting to net zero in terms of climate impact, and that would require $100 trillion in investment through 2030. Where is all that money going? That's sort of the top-down view. The bottom-up view is here are all the sectors, and here is how big each of those sectors in clean tech are growing in the coming years in terms of the amount of spend that's going on in each of those sectors. Dry powder is defined as capital available for investment that hasn't been allocated yet. So we talk a lot in our tech finance people talk a lot about how much dry powder is available. We're trying to understand what's going on in the marketplace. There's more dry powder available for investment than ever before in history. And you can see on that diagram on the right, it shows you that there's more of it going into clean tech. There's over 20 billion in dry powder available for investment into clean tech. And that was, if you look at that diagram, there was almost nothing available 5 or 6 years ago. So how do you value a company? The simple definition of doing tech company valuations are, it's a balance between how profitable and how fast a company can grow to how much money they're raising in a particular round. That investment math is people have to get a certain percentage of your company each stage, and your long-term value as a company is determined by your long-term profitability and growth. So how do we apply that to the clean tech industry? Well, it's pretty complicated. It's pretty complicated math. I remember when I was a VC doing a clean tech deal, it required way more math than I did a software company. But if we look at industry standard median statistics, if we look at these various stages of a clean tech company, we can see that there's a median deal size, and it goes from 4 million to 24 million to 45 million. So basically, these are the best, general benchmarks. If you achieve these certain stages, how much capital can be invested and what kind of valuation you can expect. And reminder to all of you, these deck will be available to all of you afterwards. So I see some people writing like crazy. When you get to a scale, these companies are valued based on multiples of EBITDA. And you can see that it's sort of peaking at about 12 times EBITDA multiples for these clean tech companies. Let's talk a little bit about venture capital and go through a bunch of these really quickly. There's more and more venture capital going into clean tech. It's going in every major geography in the world. It's all these various sectors, if you're interested in the specific sectors. The biggest one, if you look at the pattern, is basically electrification. If you look at all the forms of electrification is occurring. The more important chart is this one that shows how it's ramping up in Canada. This comes from CVCA. And you can see there's a pretty significant Q4 2022 bar there that's showing that how much more investments going into clean tech these days. And when I did my tech capital review in February, if those of you that attended my webinar, I mentioned that I thought that clean tech was going to be the most dominant sector in terms of the level of investment growth that was going to occur. The other thing that's interesting about the sector is there's a lot of strategic interest by corporations to invest in these initiatives. This is sort of a chart on the why they invest and how they invest. They all develop programs to work with startups. And then these are the logos of the biggest global contributors to investment in the clean tech sector right now. And the other area is private equity that's of interest, and that for later stage, private equity is generally for scale up at the later stage of companies. Private equity has been increasing in Canada at you can see from this chart, that's all general investment by private equity. In 2022, there was 13 clean tech deals, over 200 million invested by private equity firms. I expect that to more than double this year. And then for M&A, how do these companies exit? Well, the majority of them are acquired by larger companies. They're a very, very small amount of them actually do an IPO. And you can see that that number of acquisitions is increasing by a large amount. So there's over 100 M&A exits last year by clean tech companies. We expect that number to again double to almost somewhere between 150 and 200 exits next year. Now to the more interesting slides. Most of you are startups, so you want to know what's going on for early stage investing in clean tech. In Canada in 2022, there was 52 early stage deals. So that is seed deals plus VC Series A deals. The average deal size was just about $2 million. And these were the most frequent flyers, so to speak, in terms of making investments in Canadian companies in clean tech. So we see some angel funds that you may recognize some of those logos, some venture capital firms all across Canada, and then some corporate venture capitalists. And if I've used my time well, there might be time for a question or two before I pass it on to our esteemed panel. Does anyone have a question?
Any questions? All right, well, thank you very much, Jeff, and really appreciate the presentation. Great, I'm gonna ask my colleague, Frank Leffler, to introduce the panel.
So with that, I'd like to introduce the panel, and Shea is our moderator. She is with Foresight, Director of Programs. We have Shivani from InBC, and we have Robert from EVOC. And I'm going to be joining the panel as the angel investor with eFund and VANTEC.
Thanks, Frank. Okay, let's come up here and sit down. Can you hear me okay in the back? Yeah, great. Okay, so as Frank said, my name is Shea Sinnott. I'm Director of Programs with Foresight Canada. Delighted to be here. Thanks to VANTEC for having me and us, and be our moderator today for a very quick panel. So today we have a great group of investors investing from different perspectives in clean tech, in BC clean tech, Canadian clean tech. And yeah, I think it's fair to say that we all believe in the opportunity that Canadian clean tech offers. And so we're going to hear from Shivani and Robert and Frank about how they're investing in different ways to seize this opportunity. And then also, I think it's fair to say that we potentially, well, I don't want to speak for you, but I recognize the imperative increasingly of investing in clean tech and that the climate crisis offers. And by that, I mean that markets, increased risk and volatility, increasing pressures, culture change, policy change, are pushing us to take environmental considerations into account when making decisions, investment or otherwise. And so shifting to introductions, so I'll just say a little bit about me and Foresight. Who's new to Foresight Canada? Give me a wave if you've never heard of us. Okay, wow, most of you know us. Okay, awesome. So at Foresight, our vision is that Canada is the first G7 country to reach net zero. It's a bold vision. And we work really hard to accelerate the adoption of Canadian clean tech. I'm lucky to work with early stage ventures, many of whom are here today, working for Canadian clean tech. And yeah, speaking from the heart, that's why I'm here. I believe that I want to do whatever I can to make a difference to address the climate crisis and the climate emergency. And I think the time is now. So it's great to be in a room with all of you, working from different perspectives on this issue, hopefully. So what else would I would like to say? I'd like to say, I want to introduce, you kind of introduced us briefly, but maybe we'll just take a second to say a little bit more about each of us, our roles, our firms, etc. So first off, Shivani Chitroda, investment associate with InBC Investment Corp. And so InBC is a strategic investment fund, a public fund, $500 million to invest in funds like Evoke, as we'll hear more about, and companies, Canadian clean tech companies, working for a more sustainable, prosperous, inclusive BC. And I've primed each person to maybe say a little bit more about them, and then also, what motivates you? What are you passionate about? So we'll start there. First to Shivani. So I'll just hand the mic along.
Thank you. Really happy to be here today. My name is Shivani. I'm an investment associate at InBC Investment Corp. And before I joined venture capital, I was previously in the public equity space. So I've spent several years investing in small cap Canadian and US companies. And then before that, I spent some time on the ESG integration side. And really what I found, I had this passion for investing, but I really wanted to directly translate that into something a bit more impactful in my day-to-day. And that's really what drew me towards the world of venture and specifically impact investing, and what brings me here today. Maybe a little plug on InBC. So for those of you who don't know, thank you, Shea, for the introduction. InBC is a government-funded venture capital firm. We have 500 million AUM, and we are jointly focused on 3 pillars. The first being generating a risk-adjusted market rate of return. The second being our focus on impact, and we have 4 impact objectives. The one probably most topical to everyone in the room today is driving climate action. So we focus on things like decarbonization technologies, clean and renewable energy, circular economy, and ag tech. And then the last piece, our last pillar, is really the connection to BC. So how can we invest in funds and companies that draw that economic benefit back to British Columbia? So, and I think you said, what really, motivates you and what makes you excited about this space. So I think for me, decarbonization is arguably our #1 business risk. And while there is a lot of dry powder in the space, there still is a big funding gap, especially in the pre-seed, seed, and early stage stages. So I really think, everyone in this room, whether you're an angel investor or an early stage institutional, we all have that, a role to play. And it's a really powerful role, in my opinion, in getting Canada to that net zero goal. So,
Awesome, welcome. And next, Robert Allen. Robert is a senior VP with Evoke Innovations, climate tech, clean tech, venture capital firm. And I don't want to speak for you because I was trying to understand your thesis, but I'm sure we'll hear all about it, but especially energy and deep tech, as I understand it. So yeah, can you say more about you?
Thanks, Shea. Thanks to Shea and thanks to Frank for the invite. I also have to sit under a photo that was taken about 10 years ago. So congrats on the wares of aging. Glad to be here. Thankful to everyone in the room. We are a climate tech venture capital firm based here in Vancouver. We've got a team. We've got about 11 people, excuse me, here in BC, as well as in Toronto, Seattle, Silicon Valley, and Calgary. We are both a traditional 2 and 20 venture capital fund looking for outsized return to our LPs, such as InBC. And then on top of that, we are also a semi-strategic fund where we grew our horns, working with 2 of Canada's largest energy providers, Suncor and Cenovus. So we really did cut our teeth in heavy industry and are focused singularly on industrial decarbonization. So big projects, first of their kind, going after large established processes and markets. Shivani put forward some thoughtful ideas on why we do it. I think each of us are motivated on this stage and in the industry on why we're in clean tech and climate tech. Some of them are purely financial, which according to Geoffrey's amazing slide deck, which I will be getting afterwards, looks to be pretty meaningful. And I think also some are personal. I think, I was fortunate enough to spend some time up on the slopes in the last few days, and I think that is an example of why we do it. It's the activities, it's the traditions, it's the lifestyles that we have grown accustomed to and are attracted to, according to the ways that we were raised and the ways that we live our lives. And that is going to change with climate change, whether you like it or not. And so I think there is some level of preservation of what we are trying to do with climate change, both in mitigation and adaptation. So that's kind of why I'm here and why I'm on this stage today, existentially speaking. So back to you.
Thanks, Robert. And Frank LaFleur, of course, angel investor with VANTEC, as well as the E-Fund, which I'd love to hear more about, and also an executive in residence in EIR with Foresight. So I get to work with Frank all the time. Can you say more about you and what motivates you?
Thank you, Shea. Yes, it's been an interesting journey. So my background is working for high-tech companies over in Europe, and I moved to Canada about 20 years ago, worked for some high-tech companies here. And then about 10 years ago, I started to mentor companies at New Ventures BC, then also ran into E-Fund and found there was an opportunity to invest in early stage companies. And I thought that was very exciting, particularly if you can do that with other team members who've done that before. And so I joined E-Fund, and one of the most interesting things there that happened is one of the early stage companies we just invested in was Semioss. It's really interesting to see a company that early and see where it's going over time, but also do my first due diligence in a company called Moderator Innovation that since now has exited as well. And so when I saw that, I really thought, like, well, there is more in our backyard that I don't know yet and that I want to see. And so I joined VANTEC as one of their people to help them with the marketing and build community. And the first event that I helped organize was around agri-food, because looking at all of the sectors I'd been in, I said, well, ag and food is the last sector to be disrupted. And I'm passionate about what people are passionate about food and passionate about beverages. And the people in that industry are just all hardworking. But if you look at that industry's value chain, the opportunities to transform through innovation, anything from the bio and genomics, on-farm automation, supply chain innovation, novel foods and marketplaces, it's a perfect string of opportunities for clean tech innovation. My journey onto discovering impact and clean tech happened when I met an organization called Tonic. They're impact investors, and they introduced me to the SDGs, and that really helped demystify what impact was, a really good system. And then a few years later, I joined the Spring Impact Challenge, which was really helpful to do the work and look at a number of companies. And I think they're probably on their 6th or their 10th cohort by now. And Graham is in the room here, and I'm actually an investor coach with that program right now. So it's a small world. There's a lot of stuff that we can do with impact in our backyard. And it's wonderful to be part of it and have you all here together and do the work. And so, of course, how did I get to Foresight? Well, all these companies had great tech, and it was the days when BlackRock wrote the big letter and said, well, companies need to integrate ESG. And I looked at that, well, those are our next stage investors. And so we need to do the work to make sure that early on we start thinking about ESG. I had a conversation with Jeanette, CEO of Foresight, about that, and said, well, why don't you join Foresight? And I said, yeah, only if I can do ag tech and food tech focus. And so that's what I did. We started an AgriNext program helping companies specifically focus on that. And of course, over the past 3 years, I've been learning a lot through mentoring the companies across the country. So yeah, it's been a wonderful journey.
Forgive the awkward mic passing. I don't want to fall off this chair. Awesome. Okay, so I'd love to dive in, and I want to skip to Robert actually, especially given what we just heard from Geoffrey. Can you, based on your experience, what we just heard, experience at Evoke, like how is clean tech investment just fundamentally different from other areas of tech investment? What would you stress to the investors, early stage investors in the room? And maybe also based on your experience with what are you noticing in terms of earlier stage investors maybe getting it wrong in the area of clean tech, to be bold?
I had some really thoughtful comments, and then Geoffrey put them all on a slide deck. So I download those. A lot of the information that you'll hear is there. But I think what was highlighted there that I would like to emphasize is we did, I would hope, learn a lot in CleanTech 1.0, which was highlighted on that slide deck. There was a lot of people who saw outsized returns in the SaaS businesses and software businesses, .com, and before that, and thought that those would you throw enough money at the problem and that will result. I think you saw a lot of monies lost and a lot of scars formed from that. I think that there's possibly going to be a CleanTech 2.0 burst. There's a lot of money, as Geoffrey highlighted. There's more money on the sidelines in dry powder right now than has ever been invested in clean tech. So, money, there are only so many good deals. So I think monies will be lost. In terms of what makes a good deal and how it differentiates, I think the temporal aspect is one that I really think needs to be considered. Takes time. It really takes time to build these first of a kind plants. It takes time, especially when you're dealing with industrial giants like some of our partners, Suncor and Synovis, or whether it be Nutrien or Tech here in town. These are big, large beasts. They are in the business of risk mitigation. What is risky? New tech is risky. So both of those go against each other. So when you're dealing with novel technology and heavy industry, you have to think about the temporal aspect of it and how long it will take to reach a point of materiality. And more importantly, not necessarily scientifically or in an engineering standpoint, but also from a commercial standpoint. What level of de-risking is required for a Tech, a Nutrien, a Suncor, a Synovis to take a chance? It is often said, and sometimes said with a smirk on it, especially here in town here, that there is a big race, especially north of the border here in Canada, to be first to be second. There are a lot of operators that say, we would love to be first to be second. We want to try every technology after someone tries it. Well, that really makes a bit of a tragedy of the commons because nobody wants to take the step forward. And when we are trying to deal with, as Shea outlined at the beginning, when we are dealing with an existential threat to humanity, but also to the industries that we are trying to serve, that really begins a bit of a pretty mean game of chicken. So what I would encourage investors here in the room to look at when considering clean tech investments is, this is a long road. This is a very, very long road. Second, what are your exit pathways? I think Geoffrey highlighted it before. This is not your mom and dad's SaaS. This is not, let's reach a certain level of market penetration or network effect in IPO. That was a pretty small sliver at the top, and let's not even talk about SPAC. So those hopefully have gone away, hopefully. So a lot of those are going to be strategic acquisitions, and that goes back to the point of materiality. So that time aspect, where do you need to get in terms of technical, engineering, and commercial development to reach a point of materiality where you can be picked off by a strategic? Lastly, scientific. There is a big, big, big leap from something that's happening in a lab, whether it be out at UBC and some of the great labs that we have there, or across Canada or in North America, to the point of a piece of kit running at a plant in the plains. That is a long journey, often measured in decades. So I think what you have to think about is the temporal aspect there, and also with that, the capital. A lot of these take a lot of capital. I asked an entrepreneur with a novel geothermal technology. I said, how long do you think that this will take, and how much money? He said over 10 years and $1 billion. So these are the type of questions that you need to be asking. How long is this going to take, and how much money is it going to be? And as early stage investors, can you stomach that? Can you stomach that? So in sum, I would say clean tech is not traditional software or what we have seen in other traditional venture-backed sectors. Number two, there is a long temporal aspect as well as a capital aspect as well. So when you begin to consider all of those, if you are comfortable with those risk profiles, we welcome you to the very warm waters that are only getting hotter. And we look for good deals. We're always looking for good deals. I hope we can meet and invest in the future.
Thanks, Robert. And maybe a follow-up question, and maybe aimed more to the founders in the room. Based on where you're at, your purview, considerations for valuation, like something that we often work on with our founders is like really think about your terms. So can you maybe comment on, yeah.
I think one thing that I often find myself telling young entrepreneurs, and I am very, very quick to mention my bias as an investor, is don't consider me in the future. And whether that's an angel investor preparing for a seed investor, or Series A, or Series A investor preparing for a Series B, consider where you want to get to, the money and time it's going to take, and then back into the valuations. If you raise a $500 million Series seed valuation today, and you're going to need to raise a Series A, you're going to probably want to be north of $1 billion. So what do you need to do to get north of $1 billion of a valuation? And that's a real example that I'm giving. So I think what I would say for founders and looking at valuations is, how much money do you think this is going to take? How long is it going to take to get there? And how much capital do you need? Now, the great thing with a lot of clean tech is that it's hard tech. Hard tech is a durable asset, and you can borrow against that with some of the great programs out of BDC, out of EDC, and some of our Bay Street banks like TD and RBC. So there are different mechanisms there, but that doesn't come without risks. An early stage company is just like a young teenager, is credit unworthy according to these banks. So that comes with costs. So in the end, I would say, don't think about me as the person writing the check today. I would think about me in the future, or people like me in the future who are going to write the check, and the capital that is going to be required to reach that point of materiality where those large industrial players will begin to deploy you. And then ultimately, why you're here is, I believe, beyond the impact, is to be acquired. So I would really start thinking about that, because taking a little bit of a haircut today could mean you are set up in a better position in the future, rather than having to have a flat round or a down round, which can have negative signals to the market.
Thanks. Any comments from either of you? I don't want to commandeer. Okay. Question for Shivani then. You started speaking about it earlier about InBC, which was awesome, but can you speak to like some key markers for success for early stage companies that you look for? And then also, can you tell us more about your approach around screening and due diligence, because it's quite commendable.
Absolutely. So I think I'll start off by saying that we are actually launching our direct program next week. So there will be some more public-facing details announced then, but I can speak to this, at a very high level. But really, we do have a very detailed diligence process that spans several stages. And I would say, after the first few high-level screens, determining if the opportunity is a good fit for us, once we really dig into diligence, the thing that we really focus on, I think from a company perspective, first of all, is competitive advantage. So why can this company do this? And what's their secret sauce? Why can others not necessarily compete? So really trying to understand that competitive advantage piece. Then we'd go into product efficacy. So does it work? I think that's a really important piece, especially with early stage companies that are on that path to profitability. Is there that early stage traction? Do you see that positive momentum directionally? And then I think also very important is product market fit. So are there letters of intent from customers? Can you look at customer references? Do people, even if this works, do people want to buy it? And that's a really important thing to consider, because I think sometimes investors can get stuck at the early stage on, if this technology or product works, that's the golden ticket, but that's not necessarily always the case. And all of these things feed into will the product or technology be able to scale? And this is a really difficult thing to determine, especially at the pre-seed and seed stages. And you get more clarity as the company grows and you get into Series A, B, C onwards in terms of investing. And some other areas that I would kind of point to in terms of triangulating these if the product is or the company is able to scale, would be first of all looking at where other strategics are investing. So in CleanTech, as we saw in the presentation earlier, a lot of exits are generated by strategics. And so you want to look at where are other strategics, where are the corporations looking to invest, where are the business priorities there? And that can give you a really good sense check for understanding, where to prioritize investing from a very early stage, even from that ideation perspective. And then next would really be looking at, industry resources and understanding, where kind of our big, priorities in terms of getting to net zero and what sectors are our biggest emitters. A lot of investors use, several different resources. One that we really focus on, or what I like personally, and I've seen other investors use as well, is called Speed and Scale. So that's a book by John Doerr and also a website. And they really do a great job of breaking down, the greatest sources for emissions and tangible pieces of action that need to happen in order for us to get there. So it's also a really great sense check, especially when you're looking at, early stage companies and wanting to really triangulate on, will this company be able to scale after you kind of get past, the competitive advantage piece, the product efficacy, and the product market fit. And an example that I'll give in terms of, even if it would be to look into the ag tech space. So I think a lot of people focus on, does the technology work, right? And that might be the case. The technology might work, but historically, farmers are a demographic that are slow to adapt to change. And what we see happen there is that, you'll invest in a company, the technology works, they've proved their concept, it makes sense. But when it actually comes to selling, they might have a small sample group of interested participants, but they actually don't have that traction when it comes to getting to scale. So understanding those kinds of mechanics in the space that you're looking to invest in are also very crucial and very important. And these are kind of some of the high level things that we would look at here in InBC in order to, when we start doing diligence on an opportunity.
Awesome, thanks. And what is it about BC? Like, can you speak more to our local ecosystem? Like, why is it so competitive and, well, awesome is not a great word, but awesome in terms of like competition for startups and then also investors looking for opportunities?
Absolutely. So for some background, we are a government-funded venture capital firm. One of our pillars I mentioned before is driving that economic benefit back to British Columbia. So we like to invest in funds and companies that have those ties back to the province. And I think, a reason why the clean tech space in BC is so attractive, and I think a lot of us saw the federal budget come out this past week, and the government really prioritized investing and spending in the clean tech space. And, the fact that it is a big priority of our government is something that's a really directionally positive thing to look at, and knowing that these early stage supports will be there for the companies that need it. And lastly, I really think we have a very robust ecosystem. So we have a lot of clean tech funds, such as Evoke, based out of Vancouver. We have InBC starting to invest in directs actually next week. So that's very exciting. And we have a lot of incubators, accelerators, a lot of partnerships, and a really strong ecosystem. And I think that's something that I'd stress as well, is that as an investor, you're not going to be the expert in everything. You're not going to be able to be as hands-on necessarily with your portfolio company as sometimes you might want to be. And the value of that ecosystem goes very, very far in being able to connect your portfolio companies with others in the ecosystem. And I think BC does a really great job in having that robust ecosystem, and it's still growing.
Thanks, and I agree. We had our BC Clean Tech Awards last week, hosted by Foresight, and it felt like collaboration was the buzzword of the evening. Like, just this real desire for people to work together across sectors. So it feels good. Looking to Frank. So while you've already heard me talk a lot about the climate crisis and net zero so far, ESG is hot. And yet we know that finance first still dominates, right? And that there's like just skepticism on many sides about, well, the risk of greenwashing and sometimes green blushing, where companies will downplay their potential for environmental impact. So I just wanted to hear from you about, as an angel investor, how do you balance, finance, the numbers, and ESG or impact? What have you learned? How do you weigh it? And do you have any examples of where you've learned?
Great, thank you. Yeah, that's a big question. So when I look at great tech, the next thing that I think about is like, okay, so it's great tech and so that environmental impact on people and planet, I believe that potentially greases the skids and makes it easier to hire the right talent, attract the right capital, attract the right customers who are willing to pay because they understand the value. So the hard job to do is, in supporting an early stage company, is really help them drill down on their environmental impact potential. And organizations like Foresight are really a big help in that. It's a big job, and it's you don't do it in a month. It's something that you keep digging into. It's something where you keep uncovering opportunities to optimize your business model because you overlay it with impact. And well, of course, early on, it's more about the ideas and the potential. You got to try and envisage what that could look like when the company scales, and what that would mean to the next stage investors, because that's really what it's all about, right? That's how you need to create impact and returns through doing the work on ESG, I would say. So what did we learn in practice? Well, look at Samuel's pheromone pest control. It started with an idea, then it got validated in the field, then they found the right market for them where customers were willing to pay what it's worth, then it turned into a data infrastructure play, then they attracted big private equity capital. It's a journey over 8 or 9 years, but that focus, it's not just another tech, it's game-changing tech. Another recent investment that we made was Lucent Biosciences, which in a way is a company that produces a circular fertilizer. They're really thinking different about this, and the reason why I liked it, because if indeed, and when the farmers adopt this at scale, we are able to displace synthetic fertilizer with more local, sustainable fertilizer, improve soil health, improve plant health, improve yield at a much lower cost, and getting rid of waste. So what they do, they partner with AGT, which is a big company in pulses in the prairies. There's a lot of waste from the pea holes, and they use that cellulose core as the core to bond macro and micronutrients in, which is what the plant needs. And then they sell it back to the farmers that provided the peas at the first time. So I really like that because it's basically taking power away from the big players, the big five, Syngenta, Bayer, BASF, and putting it in the hands of the people of Saskatchewan. And of course, this is a beautiful thing to repeat, a province at a time and a state at a time, because this is a global opportunity, right? The other thing that happens at the same time, because the plants get more diverse and precision provided nutrients, it also impacts the nutrient density, which impacts our gut and mental health and bodily health. So really moving away from synthetic fertilizer and pesticides because you have healthier plants is game changing. So yeah, clearly very passionate about this. They're hard to find opportunities, but they're there, and we have some amazing companies in the room today that are game changing, and yeah, to see them soon.
A follow-up question. How did you educate yourself? Like, how did you learn? Because I know you come from, and CleanTech is so broad. So can you comment on, I know you kind of just dive in, you kind of said some of it, but can you say more about how you learned?
Yeah, I learned by doing and by working with other people, listening. I mean, podcasts are amazing, right? The conversations that you can get there, you got to find the time, and it can be long, but these days you can be extremely selective. Just use the podcast search engine, look for a topic, and you find some relevant conversations. So that's, I mean, that's a very valuable tip for founders and investors if you need to dive into things. So doing due diligence in Lucent, like clearly there was stuff that I know that I didn't know, and so making sure that you speak to their customers, to their boards, get a global perspective, so talk to some people internationally to make sure that you don't make a bad investment with other people's money. Our own money is in it as well, but it's other people's money. So doing the due diligence, and then this is kind of the fun part of eFund. The companies get screened by the investors. We have about 190 investors. About 35 or 40 of us are actively investors and looking for deals and doing the due diligence. And so we do the hard work. We write that 20, 30 page report according to a template. And we partner often with Wootif, the other angel fund that's part of VANTEC as well. And then in the follow-on round, we work together with the VCs and use their eyes and expertise. So in the case of Lucent, we partnered with Amertech, and for the following round, they wrote a due diligence report that we could benefit from. And for the first round, when they put a little bit of money in, they benefited from our due diligence. So the other part, I think that's really important, because we've just been talking about BC. I deeply believe that we need to be more collaborative across the country, but because there's a lot of domain expertise that is bigger in some of the other provinces than in our backyard. And so through Foresight, hey, I'm mentoring 30 companies and see a lot more in a year. So I'm learning a lot by doing, spending time, having conversations. And, you know, if every week you have an hour dialogue and the founders ask you the hard questions and you're thinking on your feet and figuring out how you can be helpful or who you should refer them to because they know more than I do, that all goes towards learning, yeah.
Just a quick one for the founders. Frank highlighted it, and I thought I would say it, and I try to ring this bell very loudly whenever I get the chance. We spend a lot of time, energy, and money doing due diligence into you, into your company, into your technology. You should do the same on us. Do your due diligence into your investor. Learn about what makes them tick. Learn about who holds the power there, where their money comes from and why it matters. I think that's really, really important. This is a 5, 7, 10, 12 year, maybe plus relationship. You should always be thinking about who you are bringing into your inner sanctum as your corporation. That's very, very important, and have the power to say no for the health of your company. So I want to empower the funders, and I welcome those questions from a founder when they say, hey, I've got some questions for you and Evoke. And it's like, that is a sign of someone that I think is going to go far in the ecosystem.
Just want to open the floor if you have any other comments or questions, and then same to you, Frank. Just got a few minutes left, and then I'll also ask if the audience has any questions. Okay. Frank, any closing thoughts? Yeah. Okay, cool. Questions from the audience. Yeah, Keith.
Just a couple of things that you didn't touch on. I wonder if you want to comment on two, if you look in the data about what's been successful.
Okay, I'm going to do my best to repeat the question for people online. So 2 markers of success that Keith noted in the past is the successful MVP and also business model validation, especially with recurring revenue and traction over time. And so service models. And so can you comment on that? Was that what I heard? Are you looking for that?
So that's absolutely something that we look at, within CleanTech and then broadly in all of our other sectors as well. I think reoccurring revenues and having a business having that service model really points to that, sustainable revenue generation, that sustainable growth, and is a really great sign for an early stage company, especially in the CleanTech space. But that's not to say that, companies that don't necessarily have that same business model don't have similar merits. But in terms of, seeking out that exit from a strategic, we have also seen the data point to a lot of companies that have that service business model and that reoccurring revenue stream. So would absolutely echo that that's something that we look for.
Yeah, focus on the customer, understanding how the customer derives value, seeing how and when he's putting money on the table. And I think that's more important than ever today, to shorten, to de-risk in a way, and to make sure that you're not going to die later on because you got this valuation, but you weren't customer focused enough and you weren't able to build the connections. But the one other thing that I forgot to mention as well, CleanTech and CleanTech innovation, it's not about one-on-one relationships between the CleanTech innovator and their customers. It's an ecosystem. It's systems thinking that you require. You need to understand who your partners are. So it's a much bigger game, which indeed comes down to understanding who are your ideal investors and funders across the different stages, because they're going to change. Who are the local organizations, associations, corporates that will help you do the pilots, that will give you favorable terms like Vancouver Economic Commission or InvestBC, who might have other ways to attract foreign money into the same deal. How are you going to get that diverse capital? You need to understand all of the players, because in CleanTech, it takes a village, and you got to repeat that for each and every new site and plant that you put in place. So it's the system thinking, I think, is super interesting, but it's hard.
And fitting that complex problems require complex solutions and an ecosystem to support the success. I believe we have a question from online.
We do.
Okay.
I'm going to read it for you. How do you see CleanTech touch ancillary markets? I always like to invest in pickets and spades rather than the miners. Are you looking at service providers to CleanTech?
Undoubtedly. I mean, these are all good questions. But yes, innovation comes in many different forms. I think picks and shovels are a great analogy. A bit poignant here in Vancouver. One of the gateways to the west during the gold boom. So think about the commodity and what that commodity is, and whether or not you are investing in a commodity that could have a race to the bottom in terms of pricing, or are you enabling someone to extract or recover or whatever produce, to think more positively, that resource or that commodity, and that's something that should definitely be considered. So yes, most definitely, picks and shovels and enabling services are very much that. We are looking at a technology right now that would enable, kind of to that point, would not take commodity risk or not take that particular product risk, but they are enabling large incumbents to reduce the cost of it with a slipstream, so they don't have to replace entire new bits of kit. So.
Any last questions? Yeah, I'm gonna walk the mic to you.
Hi, thanks for your comments. What I heard from Jeff and you as well, Robert, is for CleanTech, the length of time for the investments quite long, but also how government grants play into this ecosystem. And so for many of us used to looking at a company or a product, looking at signals from the private market, traction, ongoing revenue. Here, it seems like we need to consider how those companies can attract government support, whether it be south of the border or north of the border. So curious how you do diligence on understanding the potential match for public funds going forward, given that administrations change, governments change. How important is it knowing that these companies can get grants for the viability of the investment?
For example, SDTC, NRC, IRAP, BDC. Okay.
I don't know if we can, and glad to chat with you one-on-one afterwards. I think this is a bit of a nuanced question. There are two very material differences in how the United States approaches innovation and acceleration versus Canada, and that extends with IRA as and the new budget as well as other examples. I think being here and being an investor here and having a number of companies that take advantage of the non-dilutive funding here, I am very thankful for that process. There is much fewer opportunities south of the border, but there are more abundant private capital. It's sort of that inverse, that reflection. I think the quick one is, can your company stand on its own without government funding or some sort of a credit or something of that ilk? And that's why I framed that question there. I always like to think of those as gravy or additional or a top up. You should have, and there's some nuance as it relates to IRA and the new budget right now. But I think you should have a good solid business that could stand without those. As it relates to granting and funding, I think you should approach those agencies with whom many of our companies have gotten funds, just like you approach investors. You should stay in front of them early and often, making them aware of what you are doing, what you have done, what you are doing, and what you will do in the future. Thereby, when you get to that point, and once again, calling out Geoffrey's slide, Geoffrey had a great slide on where those different agencies were. And so, you should be having those conversations with BDC and EDC and say, hey, where do I need to be in terms of commercial penetration or revenue or funding received to garner your attention and ability to work with you. And so I think building towards those milestones is helpful. And then I see it as a great sort of three-legged stool of private capital, public capital in terms of grants, as well as industry. And that's that three-legged stool that I really like, is that I know that there is a customer that will help contribute, typically in kind. And then there is a granting agency that will contribute, maybe multiple with some stacking. And then there are investors, hopefully in addition to me. So not a single group is taking a single amount of that risk, and to build a pretty meaningful opportunity. So I hope, Frank, Shivani, anything to add there?
I think we have to end, unfortunately. So I want to say a big thank you to Shivani, Robert, and Frank. And before that, Jeff, round of applause for our speakers. And yeah, just to end with a rallying cry that the time to invest in climate tech and clean tech is now. And we're about to hear from some great companies. Yeah, it's smart, strategic, and the world needs it. So yeah, thanks for having us.
Well, thank you very much. We have some gifts for you for the non-VANTEC team members.
Alrighty. Thank you kindly.
Jeff, you've been referenced throughout this panel, so thank you very much for your presentation.
Thank you.
All right, everybody, thank you. All right, thank you. Welcome back, everyone, to the VANTEC Angel Network Inc., coming up to its 25-year anniversary. Someone wants to be reminded or doesn't want to be reminded of that. All right, so who is VANTEC? We've been meeting every single month since April 1999. We are a group of angel investors that really support our local entrepreneurs. They have high growth ventures, and not only do we provide them with money, capital to help them grow, but we have let them into our own personal Rolodexes. So this is really old school. People know what Rolodex is. We have over 180 members. We are the largest angel group in BC and possibly in the entire country. We've seen over 3,000 companies since we first started. And a good number of them have received investment from us. Okay, to grow our local ecosystem, we rely on some really great partners. So we are supported by the Canadian government in their National Research Council Industrial Research Assistance Program, shortened to NRC IRAP. They help us a lot with a lot of the pre-screening, and we also provide other services such as HR consulting and financial strategy consulting. And we are members of two professional angel group, the angel organization, the Canadian-based National Angel Capital Organization and the American Angel Capital Association, the ACA. So we made quite a lot of investments over the past couple of decades. And our latest, we've got the numbers in for all of 2022, we surpassed the investments made for the prior year. We made over $16 million in investment in 154 companies. Not bad. Yes, pat yourself on the back, because we did it. And a lot of them are done by our two associated funds that you heard from the panel, the E-Fund as well as WOODF. And of course, there's individual angels within our VANTEC network that made quite a lot of investments. If you're not a member, you should be, because for only $600 for a year, you have a full membership. And if you are associated with one of our partner groups or partner funds, you get the same services for $400. And if we have a very good option as well. If you want to just do online, you don't get the full benefits of a full membership, but you do get the proceedings out of these meetings after the event. I'd like to thank our network sponsors. Some of them have been with us since the very beginning. Fasken, Raymond James, Tandem Innovation, OKR, Western Pacific Trust Company, Go Recruitment, InWest Ventures, and of course, SFU Venture Labs, who we're very grateful to have this lovely facility for us to use. We also have a number of community partners. I already mentioned our associated funds, E-Fund, WOODF, and also like to talk about Karetsu Forum, Tandem, Go Recruitment, Rocket Builders, Volition, Spring Activator, the ACA, and NACO. So our agenda today, we're going to go through some community announcements. Then we're going to be followed by a number of company presentations. This is a themed event today, so all the companies that you are going to see today are all from the CleanTech space. And then we'll all convene for some food and drink. Then I saw the caterers come in, so it looks good. Next. Okay, we have a number of community announcements. I'm going to call you up to talk. Give us some insights about what you're up to. We are VANTEC, because at VANTEC, we're very community minded, and we always like to support the people in our community. So first up, I'm going to ask Roger. Make sure that.
Testing. Good afternoon, my fellow VANTEC members and most welcome guests. I'm Roger Killen. I'm the community manager for VANTEC. And what that means is my job is to help the members of VANTEC get the best possible experience that they can. Now, VANTEC has a mission, and part of that mission is to support the growth of the angel investor community in British Columbia. Translated, that means VANTEC would like to attract more members. Each of the members in the room has the right to invite a guest. And we want the guest to be a current angel investor who perhaps is looking at a different way of going about their angel investment activities. The member invites the guests attend at no cost. They enjoy seeing 15 vetted companies on average per meeting and delicious networking to follow with like-minded people. All in all, this process is designed to grow the angel investor community in Vancouver on a win-win basis. VANTEC wins, the new members wins, the existing member wins, and then the whole ecosystem serves the high growth potential small business sector. So members, I encourage you to invite the angel investors in your life and enable your guests to enjoy the bounty that is angel investing done right through VANTEC.
Thank you very much, Roger. I'd like to call on Rachel Burns. I believe she's online to talk about the New Ventures BC competition.
Thank you. Can you hear me? Okay, I'm Rachel. I'm just here to let you know about the New Ventures BC competition presented by Innovate BC. The deadline to apply is approaching soon, so it's this Tuesday, April 11th at 5 p.m. If you're wondering who's eligible, it's open to early stage tech startups in BC who have raised $1 million or less of financing and are less than 5 years old. You do not have to be incorporated to apply. And why enter the competition? The competition offers $250,000 in cash and prizes, plus the opportunity to access education, get feedback and mentorship, attend networking events, and get recognized as a startup to watch. So there's a number of sector-specific specialty prizes, including a $10,000 Innovate BC Sustainability Prize. So that might be of interest to the folks in the room tonight. And if you want to enter, just go to newventuresbc.com, and it's under our competition page. You'll need to complete a form and fill in that and then submit an application fee. Again, the deadline closes this Tuesday, April 11th at 5 p.m. So maybe you can get that done over this long weekend. If you have any questions, feel free to reach out at contact@newventuresbc.com. And my last thing I'll just say, we do have a lot of free educational seminars. So even if you're not entering the competition, please feel free to register for those online. You can go to newventuresbc.com/events. And you can join the Startup Sprint, which is happening on April 15th. And it has a day packed with seminars covering all the essentials you need for building or refining your startup. So thanks very much for listening, and hope you enjoy the rest of your event.
All right, thank you very much, Rachel. That's newventuresbc.com. If you have trouble looking for it, just go on to the vantec.ca website, click on today's event. All the contact information for all of our community announcers are on that. And I'd like to call up Shea again to come up, and she's going to talk about the Foresight CleanTech Accelerator.
Sure, probably sick of me by now, but my name's Shea. I'm with Foresight Canada. And if you don't know Foresight, we are working very hard to enable Canada to be the first G7 country to reach net zero. We need to rapidly launch, commercialize, and scale Canadian clean tech. And we do that by working with our Helix 5 partners. So government, investors, industry, academia, innovators. Since 2015, we have supported over 900 SMEs, 500 of whom have been accelerated by some of our programs, and they have generated over 1.5 billion in capital support and supported or led to over 7,000 green jobs. So we're doing well, we're working hard. Two things I would note is if you're an investor and you're not already part of our network, then please reach out to me, find me when the networking begins. We work hard to prep our ventures and can connect you with curated deal flow for clean tech, early stage clean tech. And then for founders, we're always recruiting. We run many programs, workshops, connect you to a network of over 200 EIRs and advisors. We've been doing this work for a long time, and we'd love to support you. So please come talk to me. And our website is foresightcac.com. So yeah, let me know if you have any questions, and thanks for having me.
Okay, thank you very much, Shea. I'd like to call on Dave Thomas, who will expand on what SFU Venture Labs is up to.
Great. Thank you very much, ladies and gentlemen. So we're your host. Very good to see everybody here at Venture Labs. More than anything, we're very pleased to see a number of our companies presenting today. So we're very happy to have them be participants in the venture program and also presenting at VANTEC. I was actually going to tell everybody it was really important that your companies entered New Ventures BC, but Rachel already did that. So I think I will say that we're not just the only group that does it, but there are a number of really good programs coming out. So we will see something called Elevate IP coming for another month or so. Foresight's part of that program, as are Venture Labs. And we think that that will be a real boon for a lot of the tech companies in the province as the federal government puts a fair bit of money into intellectual property, and we know how important that is. In any case, have a great day, and we'll look forward to you spending more time here. Thank you.
Great, we're having a lot of stellar accelerators. So here's another one to the list, Spring Activator. So I'm going to ask Graham Day to talk about that.
Thank you, Belzelle. Wonderful to be here. Thank you to VANTEC for all the amazing work you do in bringing this group together. My name is Graham Day, Chief Investment Officer at Spring Activator. We work with entrepreneurs across the country and internationally, and increasingly with more and more investors. Frank alluded to one of our flagship programs, which is the Impact Investor Challenge. We've run over 10 cohorts now, and one of our goals is to actually train new angel investors to go through our programs and then join VANTEC and other angel groups going forward. So there are several cohorts open right now for learning investors and also experienced investors in CleanTech, which is great for today. There's one for those who are interested in kicking off in Quebec shortly, in Atlantic Canada, and then we have a national program in health and a BC program for health-specific companies as well, all coming up over the coming months. So ask me if you want any more information on those. And then final announcement, Felzel, is that the Angels for Climate Solutions program, which is the BC climate tech version of this program, is about to conclude, and the finale will be on April 25th in a couple of weeks. And that's in person. I know, shocking, in person, not just online, at UBC downtown. So join us for that. That's an open invitation, and there are drinks involved. Not that, will sway you or anything. But.
Thank you very much, Graham. That was Spring Activator and their programs. And I believe we have E at UBC online. Is Chang Han going to tell us about E at UBC? Oh, JCE at UBC. All right, well, let's just move on. But Chang's contact information is online. So just go to the vantec.ca website, click on today's event, and you'll see his contact information. Another stellar accelerator in our community. Now I'm going to call up the founder of VANTEC and also the founder of What If, one of the founders of Vancouver Enterprise Forum. I'll tell you, Mike Volker, if it wasn't for Mike, we wouldn't be where we are today. So Mike, come on up and tell us about What If Capital.
Thank you, Felzel. Nice to see you all here this afternoon. So I'm just going to take a few minutes to tell you about What If Capital. What If Capital is a fund that I started, 20 years ago, and just to hedge, and I actually plan on running it for another 20 years or so, but to hedge that bet for my investors, I've recruited some young blood to join the party. So I want to point out Aaron Stewart. So Aaron, if you just wave a hand here. So Aaron is now with us full time, and he spends most of his time kicking the tires on new companies. So if any of you are looking for funding, he's the guy to talk to. But about What If, what I would tell you is that we're an evergreen angel fund. We've had over 150 angel investors. The really cool thing about the fund is that you can roll over your tax credits, which means that, when you come in, you get your 30%, but then in roughly 4 or 5 years, when you are in a position to redeem your shares, you can leave the money in and get the tax credit again. And so some of our early investors from 20 years ago have gotten back more than the investment amount they put in just in tax credits alone. And of course, they still have an investment which today is worth $27 a share. We just finished a $1 million investment round in the February RRSP season. So we're closed at the moment for new investors, but we'll be opening the doors again later in the year if anyone wants to join the party. However, we do have some cash available now to continue doing more investments. And I think I mentioned we've done over 140 investments since we've started. We've done 20 just this year alone, and we're looking to complete at least another 10 or so investments before the end of this year. Our sweet spot is startups. We just love startups. The earlier, the better. It can even be just a little bit past the idea stage, if you will. But we like to get in really early, and we like to get in at low valuations, and we can be helpful in helping lead around, so we can do the term sheet for you or with you and recruit investors. We also are big fans of corporate governance, so we can, we can help you with finding good directors to serve on your boards. And I should mention, since this is CleanTech, we've done about 20 CleanTech deals that we have in our portfolio. One of the earliest ones we did is General Fusion. Dennis Connor and myself, who's here, I remember we presented along with the founder of General Fusion right at a VANTEC meeting, one of our very early VANTEC meetings, and we raised $400,000 to get General Fusion launched, and it's now raised, well, do you know the number, Dennis? It's got to be close to 100 million.
There was an article in this week's Economist.
Yeah.
It said over 200 million.
Over 200 million. You kind of lose track of the millions over the years, don't you? Yeah. So yeah, yeah, you're right. The millions aren't what they used to be. That's a good line. I have to remember that one. Yeah, so we love CleanTech. Another one again that Dennis has been involved in actively is carbon engineering up in Squamish. So when you buy into a fund like What If, you're buying into an existing portfolio. It's not like you're investing in a fund that lasts for 10 years and then you cash in. This fund, I hope, will be here long after I'm gone, even long after Aaron's gone, which may be way, way in the future. So that said, if you're interested as an investor or an entrepreneur, come and see Aaron and myself during the networking session following this meeting. And thanks again for coming out today.
Thanks, Mike. Mike said a lot about What If. I'm a What If investor, just so full disclosure here. I'm going to out Mike. Mike is an e-fund investor. We do a lot of cross investing, and that's the basis of e-fund. We're very community-minded investment group, and I see a lot of the e-funders in the crowd. So all of you founders who are presenting today and want to know how you can get investment from e-fund, show up at a VANTEC meeting, and you'll have e-funders come to you. And if there's enough of them, then there's a good due diligence process, and we collaborate with What If and a lot of other angel funds to put investments in. All right, so I'm going to get started on the company presentation. So if you're interested in What If or an e-fund, come talk to us. Our contact information is on the screen here, and also again, vantec.ca, click on today's agenda. There are other upcoming investor events. Again, they're on the website. All right, so here's, if you can go on the website or look on the screen, you'll see the same information. Upcoming events for investors and for the general community. Next. Okay, so if you are an online presenter, please mute yourself when you're not presenting. A number of different etiquette things. We don't want to hear beeping or buzzing. We just want to hear you when it's your turn. Okay, no soliciting. Make sure that unless you're a presenter, and make sure that you identify yourself online as a company, investor, or a community member. Next. If you're in person, welcome, because you're going to get to eat and drink after all this is done. Place yourself on the square, right here on the floor, to be on the camera, and keep the microphone close for best audio. Use the remote to advance your slides. So we got the remote here. Okay. For entrepreneurs, it can all be summed up with network, network, network. Just talk to anybody, everybody. You never know where your capital raise will be fulfilled from. We're all we try our very best to be an inclusive, supportive community. So take full advantage of that. When you present here at VANTEC, keep your information on your GUS profile up to date, especially for full presenters, because we're members of the ACA Pacific Northwest Angel Group, and every month I meet with my colleagues from Northern California, Oregon, Idaho, Washington State, and we talk about the presenters that present at VANTEC. And when they're interested, they ask for your profile and I send it to them. So you get quite a lot of exposure than just our local BC community. The wireless is working now. So here are the information. I'll just pause in case you want to take a picture of that. Next. There will be, after all the presentations, we really like to ask your cooperation to help us make sure the tables and chairs are moved without any impediments. So we're going to be reconfiguring the room because all the companies will be at their assigned tables to talk to investors. So your assistance is much appreciated. And here's the map, and this will be set up at the end of our presentations. And I believe that's it. And I'm going to call up founder Mike Volker to introduce all the 90-second pitches.
Yeah, thanks, Belzel. So what we're doing at these events, we usually have some really short infomercial style presentations consisting of previews and updates. And then we follow that with somewhere between 4 and 6 or 7 longer presentations. So today I have the pleasure of calling up 3 previews. These are usually companies that are, maybe a little bit early on, but they want to get in front of angels, so we give them that opportunity. So first up is Biosphere. Biosphere, you here? Oh, there you are, great. So Biosphere is a Vancouver-based company developing a moss biodesign platform for the eco-friendly production of high-value specialty chemicals. Liz, your turn.
Thank you. Okay, hi everyone. So I'm going to start with a question for all of you. What do caffeine and vitamin C and aspirin all have in common with each other? These are all chemicals that originated from plants, and we use them in our everyday lives. The problem is that there's hundreds of plant-derived chemicals that we can't use commercially, even though we know they have proven therapeutic benefits, because their scale-up of production is just too complex. Sorry. So this is where Biosphere comes in. We are a moss biotechnology platform that's able to harness the complex metabolism of moss to produce these phytochemicals, these rare plant-derived chemicals, at a milligram, gram, and upwards of kilogram and ton scale with relative ease. So the market for plant-derived chemicals is very large, as you can see. Where we're starting is in personal care and cosmetics. There's a lot of interest in these in this space for chemicals, new ingredients for their formulations, as well as there's fewer regulatory hurdles and a shorter time to market for these products. So yeah, this is a team right now, myself and my co-founder Hila. We completed our PhDs at the University of British Columbia and we started Biosphere. If you want to find out more, come and talk to me.
Perfect. Thank you, Liz. Next up, we have SenseNet. SenseNet online.
Yep.
SenseNet is an environmental monitoring company with a focus on protecting remote and vulnerable assets with patented AI and IoT technology. Yep, there we go. Take it away.
Okay, great. Thank you. Hello, everyone, and thank you for your time today. I'm Hamid Nouri and the CEO at SenseNet, an environmental monitoring company with a focus of protecting remote and vulnerable assets. At SenseNet, we have developed a novel wireless and AI technology, which revolutionizing the sensor data collection, analysis, and decision-making for large-scale IoT applications. Currently, we are focusing on wildfire detection and mitigation with a comprehensive solution that include hardware, a cloud-based web application, a patented AI system, and integration with external sources such as satellite. We have already made a significant progress with around 1.5 million in signed contract and approximately 300K in award and grant since January 2022. We are also awarded Innovative Solution Canada and have generated 7 patents so far. For the first target market, we designed our solution specifically to address the problem of the wildfire. Our main target market include public authorities such as federal, provincial, state, and district fire services, as well as companies causing fire, such as utilities and railways. Just these 2 market size is 5.4 billion and will increase to 13.8 billion by 2030. We have already gained traction and installation with government agencies and private companies, such as ISED, NRCan, Defense R&D Canada, Southern California Edison, and others. Right now, we are raising 2.5 million in funding to continue our mission to revolutionize environmental monitoring. 7 investors have already expressed interest, with whom we have began talking. And thank you for your time and your consideration. My colleague will be there in person. If you have any question, ask him.
Okay, thanks, Hamid. And the last of our previews is Asset Market, which calls itself the Airbnb for EV charging, digital and IoT infrastructure.
Thanks, Mike. Sure. Test my karaoke skills. Great. Okay. Hi, I'm Jeff Davis from Asset Market. Very happy to be here. Thanks for hosting. Our job is to substantially accelerate the delivery of useful infrastructure to benefit our communities, with a particular focus on electric vehicle chargers, 5G antennas to power the mobile network, and IoT devices. There's a very substantial infrastructure problem that for these technologies to work, by 2030, tens of millions of devices needs to be installed. For every device, a decision needs to be made. Where's the best place to put this device? And a commercial lease agreement is required between the device installer, like a Rogers or a Telus or a Tesla or a ChargePoint, and the landowner. This is an entirely manual process and not scalable. Asset Market solves this problem through a B2B software as a service platform. Network providers can enter into our platform, search through millions of potential places to put devices, find the right places, and enter into the required lease agreements with landowners, all in an efficient digital process. The market for this is huge. Spend in these areas is enormous, and the benefits for our customers are also huge. So our aim in the EV space is to reduce carbon emissions by 13 million tons by 2030. We believe we can, with our analytics, take 30% of the cost out of deploying EV chargers and wireless antennas, and we can take 75% of the cycle time out of deployment for these technologies. Our medium-term forecast takes us from to $15 million in ARR within 5 years. We believe that'll return for our seed round we're raising now 11 times investment by 2027, 40 times by 2030. We're only just 2 years old. We have 350,000 in current revenue. We have 25 customers, a large number of users, and over 250,000 assets on the platform, and a very talented team of 10. We have a fantastic customer base. Customer referrals are our strongest sales channel at the moment. They're all growth customers. We have over $1 million in qualified leads in the pipeline that we expect to convert in the next 6 months. We're raising a round for 1.5 million. If you're interested, please come talk to me tonight. Thank you.
Thank you, Jeff. That's it for the previews. Now we have one update, and that is INHUB Farms, which is growing a network of smart mushroom farms in every city online. And we have Patrick, take it away.
Hi, I'm Patrick, CEO of INHUB Farms. We grow wild mushrooms in the city with robotics. We raised 1.5 million, completed a pilot, and proved the metrics. That's our growth system in my background. We got a LOI to supply Costco and got their data. Each Costco sells 1,000 pounds of shiitake mushrooms per week. Our future Vancouver farm will supply 8 Costcos. That's 7.2 million in annual revenue. US and Canada have 691 locations. So that sales potential is 490 million, and Costco actually only has 10% of the market share. We are raising 500K for common shares at a 4 million valuation to start supplying Costco and boost our valuation. We have 250K of the 500K raised already. We're in due diligence with Spring Angels for Climate Solutions for 150K. We are reducing the carbon footprint of growing mushrooms by 80%, replacing imports from China and creating a healthy forest industry. We just got 66K grant from NRC IRAP. And after this 500K bridge raise, we're going to raise 4 million at a 20 million valuation to set up a second farm in the Vancouver area by the end of this year. And we already have some soft commitments. We're closing on the 500K raise in the next couple of weeks. Contact me if you're interested.
Okay, thanks, Patrick. Okay, so that's it for the short presentations. What we would like you to do now is you'll see in front of you, there's a barcode. If you could scan that and input your favorite of the 4 presentations that you just saw. So just vote for the one that you like the best. And then what do we do with that, Thelzel?
They get to compete for one of the full presentations.
They get to come back and present again. Of course, they probably will all get to come back, but it's kind of fun to do this anyway. So if you do that, and in the meantime, I'll turn it back over to Thelzel, who will introduce the 7 full presentations. And don't worry, we're not going to be too long on each one of them. It'll be just 5 minutes, right? No Q&A and no discussion, because that can take place one-on-one during the post-meeting networking session over fine wine and snacks. So Thelzel, take it away.
Okay. Thank you very much. All right, so we took a bit of a pause for you to scan the QR code. If you are online, I believe in the chat function, you will see a link for you to vote for your favorite 90-second pitch. And as Mike said, they will be invited back for a chance to present a longer presentation. Speaking of which, we've got 7 coming up today, and each one of these full presentations are supported by an angel sponsor, someone who has worked with these companies, maybe even given them money. They're going to come up and introduce their company and tell us why we should be interested. So first up for Farment, we have Ryan Klatt.
Hi, everyone. You're going to hear about Farment. I was in emerging technologies before, but now, since spending time with this company, I've really pivoted to ag tech. I think it's worth checking out. And if you're interested in things like biogas, biostimulants, this would be something to check out.
Can you see that?
Perfect.
Hear me? Everybody hear me? I'm sorry about that. Thank you so much, Ryan, for the introduction. Sorry, I'm mobile. I'm at work right now. My name is Ralph Lett from Farment Biosolutions. Our novel technology increases stable forms of nitrogen while producing biogas by fermenting organic waste. The opportunity is in livestock manure. The problem is dairy cows can produce 62 kilos of manure a day. That equals 1.3 billion tons of cow manure produced in North America annually. Our solution is to increase available nitrogen in the organic waste by 500%. How we do that is our patented fermentation process, where we separate out the organics, we ferment the organics, we use our plasma treatment technology to add nitrogen, and we produce a high value organic fertilizer in 7 to 10 days while producing biogas. We do this with the machine we've developed called the Beast. It can take solid manure from the top or liquids, or liquid manure and liquid digestate from the side. Right now we have a service business model, but we expect that to change and the farmers take it over. We charge $200 a ton to go in and do it for the farmers. The farmer then owns his own organic fertilizer at the end. We basically take waste that's unusable and turn it into 4 revenue streams. One is a high value organic fertilizer. The other is biogas. The third is carbon credits. And the fourth is clean water. The service available market is huge. We're moving into Alberta. We're already in BC. Alberta has over 1.7 million tons of manure annually. Right now, farmers are composting manure in huge piles, losing all of their nitrogen into the atmosphere, and their phosphates are now going into the water tables, causing eutrophication and huge problems in the Fraser Valley. Other options for them is anaerobic digesters, but they're generally expensive and unsustainable without subsidies. You can see here on the right, there's a biodigester for about 1,000 head of cattle. That'll cost you about $3 million. For us, we have sustainable biobag system that are inexpensive, scalable, and for the same 1,000 head of cattle, we could do it for about $200,000. Our machines produce 25 tons of organic waste out of the manure a day. This generates $235,000 a month, or $2.8 million a year. Additional machines can be built for $375K in Canada or in the US, and our feedstocks are generally easy to get. Our growth timeline has accelerated. We didn't plan on being in the US till 2026, but we're already in the US right now and have big markets here in BC and are moving into Alberta. We have a highly functional team that I'm very proud of. I've met the guys here from Argentina, and we've already, for being together for a year, we've already generated $450,000 in revenue this quarter. We raised $800,000 through friends and family, and we're projected to earn $800,000 in revenue in BC this year. And our expected revenue out of the US is $4.5 million this year. Our goal is to raise $2 million in 23 to expand our production capabilities. This is a list of our customers that we have. We've grown quite rapidly. We have letters of intent from them all. And we do have cash deposits as well to generate $5.4 million in revenue this year. As I said, these are our numbers, our growth projections, and we run at about a 60% gross profit margin. These are our patents. We have patents for our inoculum. We have patents for our fertilizer technology and our biogas technology. We also are trademarked. Letters of intent that we're working with Fraser Valley Biogas, letters from our agronomists, I encourage you to read. And our vision is to demonstrate to farmers that fermenting their manure can be up to 10 times more profitable than composting or digesting it. Our mission is to increase nitrogen in farm waste, allowing farmers to produce their own nitrogen fertilizer. And our goal is to decentralize fertilizer production and increase a circular nutrient economy for farmers. I'm Ralph Lett. Thank you very much for your time today.
Thank you very much. That was Farment. And if you are online, you'll see a little link in the chat function for you to give a company feedback. And if you are here in person, there are scattered throughout the audience QR codes for you to give company feedbacks. All right, next up, as a full presentation is Refeed, and I'm going to call on Frank Lefflar to come up and give an introduction.
So I'd like to introduce you to Stuart Lilly. He's one of those founders who is solving a big clean tech problem in an ecosystem kind of way, and for the past 3 years. It's impressive what he's been doing in terms of redirecting food waste to food insecure people, to upcycling food waste, to eco-friendly fertilizer, including eco-tea, using worm technology to put food waste into high value manure. And he's got a few more technology integrations up his sleeve. So without further ado, Stuart, the floor is yours.
Thank you, Frank. So I've got a couple of stress balls here. You may need these after or during this presentation. We'll see. All right. Okay, hi everybody. My name is Stuart Lilly. I'm the CEO and founder of Refeed Canada. We are a nutrient upcycling company that combines biology, biotechnology, circular systems, supply chains, and data science to decarbonize the agri-food industry as well as support food security and regenerative soil applications and accelerate that. So our food system is broken. This isn't news. We've got a system that produces food that is unsustainable. It's degrading soil at a rapid pace. Food waste makes up roughly 1/3 of global greenhouse gas emissions, right? That actually equates to about 11% of total greenhouse gas emissions coming from, food waste. The agricultural system produces roughly 1/3 of all greenhouse gas emissions, with 11% coming from food waste. Our food is actually declining in nutrient value due to conventional agricultural practices. And then food insecurity is at an all-time high. In Canada, we have roughly 1 in 7 people that are suffering from food insecurity. And that's at a time when $6 billion of food is wasted every year. You know, that's pretty challenging to, the appetite to fix that is something that really resonates with me, so. The solution we feel is tackling it through circular nutrition, using products, services, as well as zero waste facilities. We use a 3-pillared approach to do that, where we recover and redirect, we rescue and upcycle, and then we regenerate soil through the products that we produce using regenerative inputs. Now our difference, why Refeed, is that we take a holistic approach to solving this. We create these circular systems. We utilize nutrients to 100% of their value. We are modular, we're expandable, we're duplicatable. They're true zero waste facilities. We find 100% utility out of everything that we bring into our facilities. They're needed everywhere in the world and they're viable. We're focused on impact. So everything that we do has a quantifiable impact that we create. So we're able to measure that and we're looking to actually monetize that as well. We're steeped in community. So our focus is really on that community level, local manufacturing, local impact. We're transparent and we're authentic, which gives us this differentiating factor over any other products on the market. The opportunity in the soil amendment market, which is our main revenue driver, is that it's a $6 billion industry that is being driven by global forces right now. You've got the war in Ukraine, you've got synthetic fertilizer costs going up, you've got regulatory, and you've got public awareness really driving change. And our products are in demand, not just in agriculture, but in municipal. They're in demand in horticulture, home and garden applications. And this industry this segment of the industry is being driven by a 10.4% CAGR, which is an underestimate, in my opinion, because these numbers came out before what was happening in Ukraine, as well as what's going on with environmental concerns and decarbonization of the agri-food industry. Our facility will generate $8.3 million in revenue by 2028. It's driven by multiple different revenue streams. We're looking for expansion into Eastern Canada as well as into the United States over the next 4 years. We will be doing that through either franchise, own and operate, joint venture, and in some cases, we'll be looking at acquisitions as well. That will generate a conventional revenue stream of $40 million. And we'll also be looking at an incremental increase once we bring on our, what we call impact credits, which is essentially carbon credits plus, where you're incorporating the social, the environmental, and the carbon aspects into an impact credit. So our go-to-market strategy, we just launched commercially. 2 weeks ago, we now have our Refeed products. We have 6 ag tech companies under our umbrella, under our distribution umbrella. So we're now bringing their products to market as well. What that does is it brings a holistic product offering under one company, where we're also able to take those individual inputs and create holistic products out of them that are needed and create the real magic in the soil. We're building everything towards a brand campaign that will be launched in the fall. That's the main buying season for the horticultural market. Our 3 pillars have expertise in each one. So we have a pillar of waste management, supply chain, feedstock acquisition and management. That's me. Dino Achille, who's manufacturing and on the distribution side of it, and then director of regenerative agriculture is Robbie Gass. We have a lot of traction, not only from the diversion side of the business, but also with academic partnerships, where we will be the next input into the SFU Aegis program. It's a $2 million growth round for accelerated growth going into 2024. And we have an exit strategy in 5 to 7 years that would incorporate either an acquisition or an IPO. I gotta wrap it up, sorry. It's a $2 million round, $7.4 million pre-raise valuation. We're 25% filled, and we are an INBC accredited corporation. So thank you very much. Appreciate your time.
Thank you. That was Refeed Canada. And again, if you're online, take a look at the chat function. You should be able to just give some company feedback. And of course, if you're in the room, just take a picture of the QR codes that are scattered throughout. I'm going to call Frank Lafleur up again because he's going to introduce Skyacre Biotechnologies.
Yeah, I'd like to introduce Ishan of Skyacres. I've been mentoring him through Foresight for the past year about that. He has a big vision. He is focused on Canada's north, that is food insecure, where retailers have tomatoes and other vegetables on the shelf for ridiculous prices. And he's developed some technology that he believes he can put in the place where these products are normally stored, so that the retailers up in the far north can actually produce the food fresh, nutrient dense, at a much lower cost that's currently available. So chapeau to you, Ishan, for having this big vision and for making it happen. The floor is yours.
Hello, everyone. My name is Ishan, founder of Skyacres, where we aim to increase food security by growing fresh produce inside of grocery stores and making farming more efficient, sustainable, and accessible. To illustrate the effects of food insecurity, I'm going to start off by talking about business owners. I'd like you to meet Mr. Keith Hamilton, and he's the owner of a grocery store in northern BC, and he's been through some pretty tough times. A truck full of produce only comes to a store a few times a year and not a few times a week, like here in Vancouver. So what he has to do is place large orders and build large storage rooms in his grocery store to hold all of this inventory. But the sad part is, by the time produce even arrives to places like northern BC, it has been sitting in trucks for 3 weeks and has already started to go stale. No one wants to buy stale produce. 1 month, he had to throw out 80% of his stock and lost around $118,000 worth of unsold produce last year. The cost of food transportation and the cost of spoilage gets passed down to the consumer, resulting in unaffordable, low quality produce. But just how unaffordable? If all you had to pick up from the grocery store were these 3 things, would you believe me if it came out to $56? But this is exactly what people living in rural communities in Canada are paying every single day. The price of 2 tomatoes are $10 if you don't qualify for the food subsidy, or $8 otherwise. This isn't a price spike caused by the floods or heat waves. This isn't a spike at all. This is normal for these people. People simply can't afford to be healthy because of these prices, and they opt for the frozen pizza that costs for the same as the tomatoes. But this has some terrible downstream health effects, as diseases like diabetes are 5 times more likely in these communities. Most of Canada's produce comes from places like California, and they're seeing the worst droughts and reduction of farmable land in history. Issues like this are bringing worldwide food insecurity at an all-time high, with almost 6 million food insecure people in Canada, but over half of them are from First Nations communities. We have a huge disproportionate numbers here. Now, what these grocery stores have, they have a lot of extra space and they have job shortages in these communities. Now, what if we can convert the storage rooms into production rooms, giving them a constant, steady supply of fresh produce all year round? And spoiler alert, this is exactly what we're doing. But before I get to that, I'd like you to tell you about our technology and how we're the right people to do this. We have developed disruptive deep tech aeroponic vertical farming technology that reduces costs significantly, increases yields, and untethers farms from climate change. Aeroponics is the fastest modality to grow food. Our business model is similar to a franchise model. We convert underutilized spaces into indoor farming operations. In many cases, we sign a $0 lease agreement and use the space rent-free. We then hire local people to help us grow this produce. This means we bring jobs and farms to these communities instead of just shipping over stale food from California. And the way we make money is by selling this produce directly to local businesses. We are owners and operators of the devices we set up in the grocery store. Now, what's stopping other people from copying this, and how does our technology enable this unique business model? Well, we've achieved all the industry standard metrics of being 6 times faster, 97% less water, 94% less fertilizer when compared to traditional farming, achieving high yields, 27 harvests per year, and 0 pesticides, being better than organic. But where we shine is our key differentiators from other companies. We have the lowest energy consumption rate compared to any other aeroponic system on the market today. This disruptive technology was based on my research from the University of Toronto. Next, we're ultra modular. We can scale up 1 square foot at a time, allowing us to be flexible enough to fill any size space, underutilized nook, cranny, and closet with indoor farming systems. And we can grow much more than leafy greens, including 37 different fruits, vegetables, and plant-based protein, and traditional First Nations medicine as well. Growing things like peppers, carrots, tomatoes, and we can do this cost effectively. Aero Farms is the leading aeroponic company today, uses 104 watts of power per square foot, whereas we only use 9. We have much lower startup costs. They spent $40 million on 1 building that hasn't broken even yet, and it's been 6 years. But since our startup costs are low using existing infrastructure, our smaller in-store farms break even within 13 to 18 months, depending on crop selection. Forgetting the large multinational company for a second, there are other companies working in the rural Canadian market, but all of them use the slower hydroponics method of growing instead of aeroponics, thus having lower yields. A few of these companies are using shipping containers to set up their farms, which sounds like a good idea at first, until you realize that you have to pay for electrical, plumbing, and HVAC to be installed in these containers. But why pay for all that infrastructure if there's already existing space at the point of purchase that has everything we need? And that is the Sky Acres logic. The numbers are in for our pilot project in Northern BC, which was fully funded by a prestigious grant from the Innovate BC and NRC. In a rural grocery store, we found 800 square feet of underutilized space, which can supply 83% of the entire community's produce demands. We can reduce the cost of fresh produce by up to 76%. Now, I mentioned before that the stores are willing to give up their space for a $0 lease agreement, but why would they do that? This is why. We set up in that same store that I told you about. Instead of making a loss on produce, Keith makes a profit by giving us space that he wasn't even using. We mitigate a whole lot of carbon emissions from entirely removing the need for long-range food transportation, reducing food kilometers from 7,000 to 0, and third-party lab tests convert that our produce is over 2 times more nutritious than before. In Canada, there's 2,000 independent grocery stores in rural communities who are facing the same problem, equating to over $1 billion in market size. But our neighbors down south have more food deserts with a $40 million market. I'm an ag tech scientist and have 5 years of experience in full stack device development. While working on this venture, Disha is finishing her MBA and JD from the School of Business and Osgood Law School. And Zafia is an Indigenous entrepreneur, and this is her second startup. We've won international and national awards. Social impact is our #1 priority, but we do realize that our IP has other potentials as well. We're looking into licensing our IP. We were the first company in the world to grow saffron aeroponically, a high-value crop, and we're in talks with Scott from SAP to build a vertical farm in the Vancouver SAP building to supply fresh produce to the cafeteria. We're raising $850K at a $2.5 million valuation to leverage government grants and set up 6 more of these in-store farms and hit 1 million in ARR. We have 2 provisional patents and have 21 more to file and are looking to onboard a reputable firm. So to summarize, we're building unique vertical farming systems that are low cost, low energy, modular, and that can fit in any size space. We detach ourselves not only from the climate shocks and being tied to specific climates that food grows in, but we detach ourselves from requiring large amounts of infrastructure to build these vertical farms. And we accelerate this by using the government's money. So we hope you will join us in making farming more efficient, sustainable, and accessible. Thank you so much.
Thank you very much. That was Sky Acres. So we'll just take a little pause here while we get set up for the next presenter. Perfect time for you to take a look at that QR code and give company feedback. Now, Cellulotech, I believe, is online. And the angel sponsor is Louis Vincent Gav.
Yes, can you hear me?
All right, so Cellulotech. Go ahead.
Thank you very much. Thank you very much. And unfortunately, my angel is in a plane with a very bad network and he couldn't attend. I'm very sorry about that. Thank you very much for allowing me to introduce you to my material science company, Cellulotech. As you all know, we have huge issue with our economy, which is it relies on over 100 billion tons of materials every year to work. And only less than 20% of these materials are renewable and less than 8% are recycled. So the question is, how can we fill this gap with something that is sustainable and easy to convert? The obvious answer is cellulose. This is by far the most abundant organic compound on Earth. And the question is, how can we give it the properties we need to replace the 80% of the materials, or at least some of the 80% of the materials we use that are not renewable? This is where our technology comes in place. Usually to work with cellulose or other type of substrate and give them barriers to other elements such as water, grease, air, and everything, you use coating technologies. Coating technologies add the layer of material on the top of different fibers such as cellulose. Our technology is molecular grafting. We attach 1 nanometer molecules on the fibers in contact with air. This allows us to be 1,000 times less material intensive than coatings. Then we have a material you can cut, fold without any crack or loss of properties. And the end of life is much easier to manage, and the paper remains, or the other substrate remain recyclable like they were before. So in the end, you can start with a cellulosic substrate, cellulosic fibers, cotton, paper, you name it. Then we leverage an existing low-cost bio-based reagent already available in the market at a large scale. And with our technology that is patented and the equipment dedicated to that, we can produce materials such as papers that doesn't get wet, paper Gore-Tex, alternatives to plastics or silicones and so on, that are recyclable. The process is scalable. It takes just 0.1 second to treat substrate. It can be applied on 2D and 3D surfaces. It is solvent-free and bio-based. The cost is very low. As I said, we use 1,000 times less material than coatings. We use milligrams per square meter to get the properties we need. And the reagents cost just $2 or $3 per kilogram. So for $2 or $3, we can treat tens of thousands of square meters. It is unmatched by any other technology. Then, of course, the end product remains recyclable in the standard stream. So we have this ability to replace thousands of different materials that are very harmful and unsustainable for the packaging industry. We can offer properties that are unmatched, like papers that doesn't get wet forever. And we can make paper products more durable with less pulps. This also allows us to go to different markets such as construction, healthcare, textile with this technology, and not be limited just to the packaging sector, which is a low-hanging fruit for us. In the end, depending on the material we can replace, savings can be very high as 91% versus what is currently used, save CO2 emissions up to 96%, and offer recyclable products where they were not recyclable today. This is a quick demonstration video to show how it is. These are 2 paper towels. One is treated, one is not. The one that is not treated on the left absorbs water immediately. The one on the right behaves like a lotus leaf. I can try to put it in water, nothing will get it. And then this paper, I can fold it, cut it, it won't lose any properties. We have killed the capillarity of papers. So the first market we focus on, as I said, of packaging, whether it's to reduce pulp usage, replace paraffin, some PE coatings, silicons and redesigners, and so on. These have been validated by external companies in terms of properties and are ready to scale up if we can run successful pilots at a larger scale. This is a big market, but of course, as I mentioned, we can go to larger markets such as construction to replace Tyvek, for example, with paper, membranes to desalinate water, face mask made fully with paper. We have passed the ASTM standards with that, and so on. Our business model is focused on licensing, though we intend to produce materials for high-end and niche application as well, and provide some advanced reagents and substrates for very niche applications again. Where we are now, basically, we have validated this technology with several leads. We address our technology to paper mills and converters, a lot of them, and we have recently received a memorandum of understanding from a large European packaging company to be the first on the market with their own industrial pilot, and they want to do it as fast as possible. We have an IP strategy, so we fully own the process that is covered by 3 patents, and we are now developing new patents with large companies around the new reagents and new substrates for our chemical process that will allow us to span more applications, and as well as patenting some designated applications in order to build an ecosystem where many actors have an interest to preserve our moat, and where we also have different streams of revenue other than royalties. We are looking for $2.5 million as a seed round in order to build our industrial pilot, of course, expand our business development team, continue our legal strategy. And our goal is to enter into our first licenses late next year. And we just need a few licenses to be cash flow positive because of the high margin of this business model and the high volume we're talking about too. The team is centered around myself with an investment background in natural resources and materials, and my partner Daniel Saman, who discovered this process. We are also advised by the former president of WestRock, one of the largest packaging company in the world, and Andrew Filler, who is a heavyweight in the IP in the Valley, advising unicorns. So thank you very much for your attention. If you're interested, feel free to reach out through the email address you see here or after in the networking rooms. Thank you very much.
Thank you very much, Cellulotech. Fortunately, they're not here in person, but you can put questions by just clicking on that QR code. So not just feedback, you can also do questions. Now I'm going to call on Dave Thomas, who will introduce Nano Sentinel.
Great, thank you very much, Thalzel. So I think the slide shows a lot of the information and you don't want to hear from me. So I would like to introduce our second female CEO of the day. And I think that's a very important thing, Viri Perez. Thank you.
Hello, everyone. I'm Viri Perez. I'm the CEO and co-founder of Nano Sentinel, and we build the best lab in a box for toxic metal testing. We're empowering the clean tech and the critical minerals industry with reliable data to make informed decisions. Metals very much enable energy storage, but they can be good and they can be very bad too. And Sony learned this the hard way. They lost 65% of their annual profit on recalled batteries that were contaminated with only a few specks of metal dust. But how can you really blame them if testing for metals is really hard? You have to either spend the time and the money setting up the infrastructure, finding the right instrument and the right talent, or spend just about as much contracting the services from service providers and having to wait 2 weeks to 9 months even to get your results back. Clean energy manufacturers now are facing the same challenge. On one end, they're trying to add metals to boost performance, but they need to make sure this technology stays clean. The exhaust that comes out of a fuel cell might carry metals, and we don't want those to be the emissions we're worried for tomorrow. Our solution is a combination of hardware and software. You only need one droplet of the sample to do the analysis. You get results in 4 minutes, and we produce 90% less waste. We're a B2B platform as a service company. We have a hardware rental as access to a proprietary database hosted on our web app, and it comes with services, and we get recurrent revenue from consumable sales. We recover the cost of our hardware in only 3 months, and we've optimized our margins to 70% on the subscription. This is a picture of our first customer. This is Cummins New Power. They're very well known for the diesel engines. Now they're stepping into the fuel cells. We already have a signed LOI. We did a paid demo with them, and they're currently reviewing the annual contract. We have three different subscription models. Most companies will be on the plus, depending on the number of metals they measure for. The enterprise level is more for the service providers. And we estimate an annual purchase of $115K, including the subscription and the consumables. So of course we have competitors. There are large instrumentation companies selling these instruments to service providers. None of them are portable, none of them are fast or low waste. And these established companies have a fair market size, sorry. So the Canadian opportunity is 300 million. The US market is 4 times that size, and the European market is currently growing with the energy demands for geopolitical pressures. Our go-to-market strategy, starting with fuel cells and electrolyzers. Manufacturers, some of them will become service providers. We recognize there's a large need in the critical minerals industry. And of course, we'll need channel partners that are established companies, in some cases in instrumentation already. And this is why it's so important, because this is part of our exit strategy. So this industry has a very dynamic M&A activity. They're not only looking for revenue, they're also looking for the technology offer, and we're building for both. In 2019, we started as just an idea. Today, we're a product-ready company. We are patent pending in the US and Canada, and we're ready to grow our customer base. We have an amazing team. We've been able to combine our expertise in sensors, hardware, and software, and I bring in the expertise in chemistry. And we have amazing advisors, seasoned entrepreneurs, industry experts, and former founders with exits. We're raising a pre-seed round of $800K at a 3.5 million valuation. These are common shares. We are registered EBC, and the goal is to grow our revenue to 400K this year. That's 11 accounts. Obviously, grow the team that's going to help us do that and increase our metal offering. And please let me know if you have any connections in the fuel cell, hydrogen, or in the mining segment. We're always looking for introductions. Thank you.
Thank you very much. That was Nano Sentinel. And Nano Sentinel and all the other full presenters that are here in person will be happy to take your questions live. Next up is Lite-1 Microbial Dye. And I'm going to ask Tony Redpath to come up and give an introduction to Lite-1 Microbial Dye.
Okay, great. I want to thank the organizers for giving me a chance to introduce Roya Ajiji and Lite-1. As you know, my name is Tony Redpath. I have a confession to make. I'm a former partner in an Ontario-based venture fund. I'm retired and recovering from that, and I'm an angel investor now, like you. Along with a number of colleagues, we invest in and work with clean tech companies across Canada. And a bit like the VANTEC slide I saw earlier, we provide capital, connections, and advice. Lite-1 is an opportunity that my colleagues and I are very excited about. But you don't want to hear from me about that. You want to hear from Roya. So I'm going to turn it over to her now.
Thanks, Tony, as always. The colors of our world are beautiful, but what if I told you our beautiful, colorful world was killing humans and the ecosystem? The negative impact of the dye and pigment industry goes beyond what you can imagine. This industry uses 800,000 tons of synthetic dyes annually, resulting in the release of 72 highly dangerous, irretrievable chemicals into our drinking water, and is responsible for 20% of global water waste. The girl that you see in the picture and her family are first-handedly experiencing the severe damages that this industry has on their health and they're not alone. From industry standpoint, many major brands such as Nike have announced ambitious goals to reduce their negative footprints on the environment, especially in the dye and color sector, but they're desperately struggling to find solutions that meet their sustainability goals, are viable and scalable without compromising the function. In other words, they're unable to find a technology out there that meets that suits their pain. Lite-1 is here to change that. We introduced 100% sustainable grown dye from microorganisms in nature that can safely go back to nature. In other words, we grow the future of color in a circular system customized to the need of each industry that uses colorants in their manufacturing processes in a plug-and-play solution in a variety of colors that works in multitude of materials. So how do we do this? Through our proprietary patented technology, first, we identify the organisms in nature that can produce the desired colors from the industry. We isolate the gene responsible for producing that color, and through a process similar to brewing beer, we grow it at scale. You heard it right. We grow the future of color, fundamentally transforming the dye industry. I can shout.
No,
I'm good at that.
no.
All right, can you hear me now? Oh yeah, great, you're back on. How big is the market? The global dye and pigment industry has a value of $39 billion. That excludes the pigments that are used in pharma. We have identified textile dye industry as our first market entry with a value of $11.3 billion. And we are set to capture our beachhead market of $64 million, including early strategic adapters, such as Nike, Adidas, Puma, and many more that they already have an allocated budget for obtaining sustainable innovations. To be clear, government regulations, rules, mandates, consumer demands makes it no longer an option for these brands to find solutions like ours, and we are happy to help. I'm very proud. Our business model is a B2B structure, and we are going to hit the market in two different phases. In phase one, we are going to sell our dye exclusively to our consortium members at a premium price of $250 per kilogram. And to clarify, for your reference, this is the price that the industry is already paying for organic dyes. And after a scale up, we are going to reduce our prices to compete with the synthetic dyes out in the market at lower than $200 per kilogram. And that's going to open a huge market portion for us. I'm very proud to announce that our technology puts Lite-1 in a very advantageous position to compare with the competition, both from the compatibility, being a plug and play solution, meeting the needs of the industry, and from color and fiber variety that we can cover. Our team consists of myself and my co-founder, Sarah, and together we have over 20 years of experience in biofabrication, innovating new and sustainable materials using biology and nature, a sustainability consultancy, and we have led globally recognized fashion and design projects. Working from inside the industry have given us invaluable insights on where the gaps exactly are and what we can offer as viable working solutions. Although a very powerful team, we know it's not enough. That's why we have created a complete roadmap of our future hires, building the dream team, building us for success. Let's talk about our pathway to $60 million revenue by 2027. In first couple of years, we are going to be heavily focusing on R&D, testing trials, bulletproofing our product, and building a consortium structure, including prepaid customers, loyal customers of our future. In 2025, we're going to generate the first round of revenue of 2.5 million, soft launching our dye to consortium members. And from there, based on our extensive market research, only by obtaining 5 new clients per year and feeding 1 color dye to their lowest volume of production, we are able to double our revenue every single year. So to clarify, this is just based on 1 color dye, 1 industry. Some of the exit strategies that we have been exploring, we are early stage, so we are still exploring and open to suggestions, are either going public or being acquired by some of these companies that you see on the screen, that they have a very outstanding reputation and portfolio of acquiring innovations like us. Although a very young company, we have been making a lot of fast achievements, and that's just a proof of what you can do with a little bit of more of your support. So just to name a few, we have launched our first pilot project with a company called Flexi using our purple and yellow pigment to create bioplastic packaging. We are launching our second pilot with a company, Deserto, using our blue and orange pigments to creating bio-leather innovative materials. And the most exciting one, we are in exploratory conversations with Nike, a couple of steps away from jumping in. Today, we are raising $750K, positioning us to gain our first round of revenue of 2.5 million. And these are some of the milestones that we are going to be achieving. We're set to achieve in over the next 18 months. I'm very excited that some of them already have kicked in a lot earlier than what we expected, which is super exciting and super fast. I would like to invite you to join us in future-proofing our colorful world, just simply because there is a reason we don't see the world in black and white. Come find me and talk to me, as we are hoping to close this round very soon. Thank you.
Thank you very much. That was Lite-1 Microbial Dye. Right. So we're getting near the end. We're going to be rearranging the room. So we'll have a chance to talk to all these entrepreneurs. I'm going to call up Mike Volker, founder of VANTEC, founder of Woodif, and he's going to introduce our final full presentation.
This one for
Talius.
Okay, yeah, thanks, Telzo. And Keith, are you here with Frank as well? I am. Where's Frank? Oh, good. Hi, Frank. Yeah, so I mentioned earlier that Woodif likes to, that our sweet spot is startups, and the earlier the better. But this is a situation where we made a departure from that. And the reason is really because of Frank and Keith, who's going to give the presentation. And we did it primarily because we saw that it would produce a good return for our investors. So while we like to support entrepreneurs, and that's our main focus, we also have to take care of our investors, otherwise we won't exist for very long. As a testimonial to their abilities, and I've known them for a couple of decades, they're very much hands-on. So what they did was create a special purpose vehicle to invest in Talius. And last fall, Talius ran into a little bit of rough water, shall we say, and they had some troubles in the management suite. And lo and behold, Frank and Keith jumped right in there, rolled up their sleeves, and took over that responsibility and made sure that there was no disaster in front of us. So I'm going to let Keith tell you the story about Talius, and I hope that it'll intrigue you. So Keith.
That's great. Thank you, Mike. Really appreciate your support. Thank you, everybody. It's great to be here. All right, we got 5 minutes. I'm going to go very quickly through a lot of stuff here. So Talius is a clean tech company. Didn't know it was a clean tech company. They are the Canadian leader in roll shutters and what they call habitat screens. These are for energy efficiency and security. They can reduce the air conditioning costs in a building by 50%. They have a 93% market share in schools here in BC, which should give you an indication of the quality of what they're doing. But what they were only focused on before is BC. And we see an opportunity here for them to become the leader in North America. So we are raising a $4 million growth equity round. We're going to be using that to buy to buy a profitable roll-up opportunity here. We've previously raised $6 million to do this, plus debt from RBC to help buy the company in the first place. So let me tell you what they're doing here. They provide solutions for sun, for storm, for security in markets like schools, for retail, for institutional customers, and they do high rises, providing solutions such as branding, anti-graffiti coatings, and sensor automated buildings. There are 4 major markets here. Schools I've talked about, commercial applications, multifamily going into high rises or condos, and modular, which is a smaller but fast growing opportunity. Some couple of quotes here from BC schools. As soon as the Talius products were installed, vandalism ceased, problems ceased, and the operating costs of schools declined. This is why we have a huge market share here and why customers essentially, when they try something else, rip it out and put the Talius products in. It's huge impact here. With 50% air conditioning costs addressed here on the climate side of the things, you can reduce the interior temperature of a room by more than 7 degrees Celsius during the summer. The greenhouse gas emissions on that can, if we were to roll this out worldwide, is 4%. That's a huge bite of a big problem. On the community side here, we save enormous amounts of costs to communities and we provide security in difficult areas. Technology-wise, here is mostly on the engineering side. We've developed our own IP, and Horman, which is a leading European supplier, have done joint IP development together with us. We have sensors and software for automation and control, and we have a huge amount of advantages over all of the North American competitors in a very fragmented market. A great example here is a new product we just introduced this year. This we call Shield. Shield is specific to the problems of schools in the United States. This is a one-button or automated lockdown system that has an RC2 or up to RC4 certification to delay intruders up to a half an hour per door. And we are introducing next quarter an honest to goodness bulletproof version of that. We are working with third-party developers to incorporate machine vision solutions into this that will allow for the automatic detection of an active shooter situation and do an automated lockdown proactively. So what are we going to do with the $4 million that we're raising? Well, we're buying a profitable roll-up company that has a $3 million top line, $1 million EBITDA, very high EBITDA margin. This company only makes Talius products in Ontario right now. They're already vertically integrated. So we're buying it for half cash, half debt from a major Canadian bank. So 1.5 million of the 4 is going to that acquisition. 2.5 million is going to our working capital needs. And at the rate that we're growing, we're targeting 50% growth this year. We really need that working capital. So we have a path to get to $50 million in the next 4 years. There are more roll-ups coming beyond this one. As Mike mentioned, we had some challenges last year. Those challenges have resulted in opportunities and brought us into 2023 with a lot of confidence. So we're targeting 50% growth. In the first 2 months of the year, we had 64% growth. The quarter as a whole, we have yet to get our financials, but growth was fantastic. Profitability, also great. We took our gross margin up to 45%. All right. And I will jump to the end here. We're confident we're going to be able to sell this company for more than 10 times EBITDA at more than 10 million in EBITDA for over $100 million. The multiples show that at high growth, we should be able to get as much as 20x there. And please come and talk to us. We're going to have a booth set up here with the actual Talius products here in the room. You can handle them, ask us any questions you like. I'll look forward to hearing from you. Thank you very much.
Thank you very much. So this concludes today's VANTEC presentations. The next meeting will be on May 3rd, and there'll be a general VANTEC meeting. And following that, the following month, on June 7th, it will be themed Life and Health Sciences. That includes all the health IT as well. It's very fast growing, very exciting market. And before we close off completely, I want to thank the VANTEC team. They're all the people, hardworking people behind the scenes. You met Yush at the door, Charles Brooks, Peter Wilkins, Ashma, who's been working on the operations behind the scenes, our fantastic tech team of Wendy, who's on tech, and Mateus and Jackson. My colleague Frank Leffler and I work hard to bring this, work with the whole team, work hard to bring this to you. Of course, special acknowledgement to our founder, Mike Volker. So thank you very much, and we'll see you next time.